What if I told you the free market is a myth, that the chaos of the world is actually a code running on a server in a bunker in Washington state? It watches $21 trillion. It decides who eats and who starves. It is the operating system of capitalism. And it is controlled by one man who swore he would never be blind again. Welcome to the machine. There is a specific kind of silence that happens right before a skyscraper collapses. It isn't quiet. The beams are groaning. The glass is shivering. The air pressure drops, but the human ear deletes it. It's a survival mechanism. We deafen ourselves to the things we cannot survive. In 1986, Larry Fink was a god. He was the rock star of Wall Street, the youngest managing director in the history of First Boston. He had built a machine that turned debt into gold. He had taken the American dream, the home mortgage, and chopped it up, packaged it, and sold it to the world. He thought he had tamed the beast. He thought he controlled the future. But the beast has a name, and the beast does not like to be tamed. In one afternoon, the market moved in a way his models said was impossible. $100 million vaporized, gone. Not stolen, not lost in a fire, erased by a mathematical blind spot. He was exiled, humiliated. "I did not have the option to stay," he said. The king of Wall Street was thrown into the gutter. But here is the thing about monsters. You don't kill them by cutting off their heads. You just make them angry. Larry Fink didn't retire. He didn't go play golf. He decided that he would never be blindsided again. He decided to build a brain that could see the future, and he would use it to buy the world. They manage $10 trillion. They own a piece of everything you touch. They are the fourth branch of government. This is not a story about finance. This is a story about control. To understand the empire, you have to understand the exile. Larry Fink was born in 1952 in Van Nuys, California. He wasn't a Rockefeller. He wasn't a Morgan. He was the son of a shoe store owner. He grew up far away from the canyons of Wall Street. He wasn't a math prodigy. He wasn't a chess grandmaster. At UCLA, he didn't study economics. He studied political theory. He wasn't interested in money for the things it could buy. He was interested in the structure of power. He wanted to know how the machine worked. When he graduated in 1976, he didn't run for office. He strutted off to Wall Street. He had no plan. He just knew one thing. He wanted to win. First Boston, an investment bank with a reputation for sharpness. Fink was an outsider, a Jewish kid from LA in a world of East Coast blue bloods. But he had something they didn't. He had an appetite for the boring stuff. While the other masters of the universe were trading stocks, glamorous, loud, sexy stocks, Fink went to the basement. He went to the bond desk. In the late 70s, a home mortgage was a dead asset.
A bank lent you money. You paid it back over 30 years. The bank sat on the loan and waited. It was slow. It was inefficient. Fink and Ranieri looked at this mountain of dead money and saw a gold mine.
They invented securitization. They took thousands of individual mortgages, pooled them together, and sliced them into tranches. They created the mortgage-backed security. Suddenly, Wall Street could trade the American homeowner's debt like a stock. It was alchemy. It unlocked trillions of dollars of liquidity, and Larry Fink was the sorcerer supreme. By 1986, Fink was untouchable. He added over $1 billion to First Boston's bottom line. He was the youngest managing director in the firm's history. His team were rock stars. They walked through the office and people parted like the Red Sea. Fink later admitted, "My team and I felt like rock stars." But rock stars often die young, and they usually die of an overdose. In Fink's case, he overdosed on certainty. The markets were bullish. Interest rates were falling. In the bond world, when rates fall, prices usually rise. Fink's desk was loaded with MBS. He should have been making a fortune, but he had missed something, a ghost in the machine. He didn't understand negative convexity. It sounds like boring jargon. It's not. It's a trap. Here is the mechanism of his destruction. When interest rates fell, American homeowners did the smart thing. They refinanced. They paid off their high-interest mortgages early. First Boston wanted those 14% interest payments to keep coming for 30 years. Instead, they got their money back immediately, right when interest rates had dropped to 8%. They were forced to reinvest that cash at lower rates. The premium they had paid for those assets evaporated. The asset duration collapsed. He had lost $100 million in a single quarter. The quarter before, he had made $130 million. But on Wall Street, you are only as good as your last trade. The rock star became a leper overnight. Nobody looked him in the eye. The phone stopped ringing. He went from CEO in waiting to outcast. The shame was total. But in the shame, he found a lesson. He realized that he hadn't lost money because he was stupid. He lost money because he was blind. He didn't have the data. He didn't have the risk management tools to see the negative convexity coming. He was flying a fighter jet with no radar. He made a vow. I will never be blindsided again. He would build a new firm, and this firm wouldn't just trade bonds. It would analyze them. It would X-ray them. It would simulate every possible disaster before it happened. He needed a partner. He needed money. He went to the one man who had enough of both, Stephen Schwarzman. The year is 1988. Fink pitches his vision to Schwarzman. He doesn't pitch a hedge fund. He pitches a risk management firm that happens to invest money. Schwarzman bites. He gives Fink a desk, a phone, and a $5 million credit line. But the price is steep.
Blackstone takes 50% of the company. They started in a one-room office. For the first few months, they couldn't raise a dime. "We were laughed out of a lot of rooms," Fink said. "Who wants to give money to the guy who just lost $100 million? But Fink had a secret weapon. He wasn't just selling returns, he was selling safety.
He was building a piece of software, a digital crystal ball, Aladdin. It started as a simple spreadsheet, a way to calculate the risk of a bond portfolio, to spot the negative convexity before it killed you. But Fink kept feeding it. He fed it interest rates. He fed it mortgage prepayments. He fed it weather patterns. He wanted to simulate the world. He used Monte Carlo simulations, rolling the dice of history thousands of times a second to see every possible future. While other firms were gambling, BlackRock was counting cards. By 1994, they were managing $23 billion. But the ego clash was inevitable. Two kings cannot share one throne. Fink and Schwartzman began to butt heads. The fight wasn't about money, it was about equity. It was about control. The divorce was messy. Schwartzman sold the unit to PNC Bank for $240 million. He later called it a heroic mistake. That $240 million stake would be worth tens of billions today. Fink was free. He renamed the company from Blackstone to BlackRock, a subtle shift from a stone to a rock. And then he waited for the world to burn again. 2008. The global financial crisis, the very thing that destroyed Fink in 1986, toxic mortgage assets, was now destroying the entire planet. Wall Street was on fire. Bear Stearns, Lehman Brothers, AIG, the giants were falling. The U.S. government was in a panic. They didn't know which banks were solvent and which were zombies. They didn't have the data, but Larry Fink did. The phone rang at BlackRock. It was the Federal Reserve. It was the Treasury. They needed a cleanup crew. They needed someone who could look inside the toxic waste of Bear Stearns and AIG and tell them what it was worth. Only Aladdin could do it. Only Aladdin had the processing power to analyze billions of complex derivatives overnight. BlackRock was awarded massive government contracts to manage the bailout assets. No-bid contracts. They became the manager of the U.S. government's distressed portfolio. Fink moved from being a participant in the market to being the referee. While his competitors were going bankrupt, BlackRock was getting stronger. They bought Barclays Global Investors in 2009. This deal gave them iShares, the ETF machine. The acquisition of BGI was the coup de grace. It gave BlackRock the passive index fund business. Suddenly, they weren't just managing bonds. They were managing the stock market. If you own an S&P 500 fund, you are paying Larry Fink. He had achieved the ultimate hedge. He didn't need to pick the winners anymore. He just owned the whole casino. Today, Aladdin monitors over $21 trillion in assets. That is more than the GDP of the United States. It sits in East Wenatchee, Washington, cooled by the hydroelectric power of the Columbia River. 6,000 computers watching every trade, every risk, every heartbeat of the global economy. This is the apex lesson. Larry Fink learned that you cannot beat the market by guessing. You beat the market by becoming the market. He built a system so essential that the world cannot function without it.
If Aladdin goes down, the global financial system freezes. It is the central nervous system of capitalism. The man who lost $100 million because he missed a detail now owns the details. He owns the data. He owns the shares. He owns the debt. He started as a gambler. He became the house. And the house always wins. Risk is opportunity.